Hi, I'm John Roberts, a partner at Moore Kingston Smith in the technology sector, and I'm here today with David Coates, our M&A Tax Partner. We're going to be discussing M&A tax considerations for technology businesses, particularly those fast growth SaaS businesses. So can we pick up first in terms of what you're seeing in the market for SaaS businesses, particularly with M&A tax?
Yeah, so I think in particularly fast growth businesses, I think it's fighting this constant battle between being fast and agile and implementing things quickly and actually taking due care and attention around ever increasing compliance and regulation in taxation. And there are some key themes and trends that we see coming out in particularly tax due diligence processes at the moment for businesses in this sector. Every business in every sector, employment-related securities and share option schemes are always a key issue on due diligence. If they're not implemented correctly, the financial implications of getting them wrong can be significant and actually can make or break a deal quite frequently. So having a lot of good regulation and compliance and governance around implementation of employment-related securities and actually issuing shares or even EMI schemes is really important. Fast growth often means international expansion as well. So businesses looking to grow overseas brings a whole myriad of complexities from a taxation perspective, and remaining compliant with things like global mobility taxes, transfer pricing, permanent establishment creation. Again, these are common themes that come out on a due diligence process. And then just generally with compliance around taxation for business and sector R&D, again, ever-changing landscape in terms of the amount of compliance work that has to go into making a claim. HMRC are increasingly making it difficult to access some of these reliefs and grants, so actually being compliant with the actual process, a lot of it which is fundamentally basics of the process, getting them right so actually access the money is important as well.
Interesting. Sounds like quite a complex and challenging environment we're trying to support our clients in. So are there any particular, you mentioned quite a few aspects there, but are there, in terms of being kind of investor ready, particularly when you're fast growth, lots of things to think about, but are there any particular things you think would be really important to focus on?
I think always having a mindset of putting yourself in a buyer's shoes is quite important. Actually, some things, although they might appear to be the most tax efficient option to you, might not be the most straightforward for somebody looking to buy your business as being tax ready almost for that process. So always thinking, what would a buyer make of this, what I'm doing? And I think being in a position where accepting the fact that if you've gone on quite a fast journey of growth, perhaps there might have been some things in the past that you didn't take full advice and guidance on. Actually revisiting those ahead of a DD process is quite important. I think if we can get on top of some problems before they are spotted on a transaction, we can at least deal with them, address them and rectify them before a DD process. And that can take two different forms, really. You could either go down the traditional full vendor due diligence process where actually you undertake your own full scope DD, or actually sort of a more internal health check of your tax compliance and affairs, and actually having somebody come in, look at what you've done historically and look to rectify some issues before we even think about going into a transaction process. I think they're quite useful exercises to go through, particularly after a period of fast growth.
So if I think about it from the founder perspective, obviously I'm sure you're working with transactions, diligence at seed or Series A. Are there any particular differences with what the advice might look like at those stages?
Not particularly. I think you find that the complications that arise are sometimes a little bit different. I think particularly at investment stages, rather than dealing with things like share option schemes, actually quite a lot of the time you're dealing with founders that have made promises of giving shares or have actually gone ahead and given shares to people, not really thinking about the implications of the value that's attached to them and what that means for employees. And actually sometimes you end up in a slightly more difficult position there, because actually if you have raised funds at particular values, HMRC have got quite a strong basis on which to start their argument around what those shares were worth. So I think sometimes actually having those investment rounds adds a layer of complexity to what is already quite a complex process of equity reward and equity incentives for employees.
Okay, so thinking then to the sort of CFO or the FD, fast growth, lots of challenges, but clearly employees and looking after those aspects and incentivization is important.
Yeah.
Are there any particular areas you're seeing that have changed in the last couple of years, or areas that we're encouraging those individuals to be more focused on to make sure they're set up?
One of the big changes is So I think I mentioned before, EMI, for instance, is a very, very attractive equity incentive scheme for employees. So there's a big group of businesses that are probably in this space now that didn't apply, and they didn't qualify before, but they do qualify now. HMRC have kindly given people quite a lot of advance notice this coming in. So the changes actually came into effect from the 6th of April 2026, despite having been announced prior to Christmas in 2025. So actually, it's given businesses quite a lot of time to plan and prepare and assess whether they fall within the new criteria.
And then thinking about, I suppose you've also mentioned the sort of general compliance aspects. In terms of kind of the importance of keeping on top of those, I'm thinking of kind of the R&D scheme and how that shifted and changed. Are there any particular areas where we're advising clients or finding challenges or particular ways to support businesses in the space?
Yeah, we found, particularly when HMRC moved to introducing things like the advanced notification of claims, that actually it's taken quite a long time for businesses to really, really take that on board and actually remain and get fully compliant with the process. So again, that's where HMRC generally as well are taking a much more stronger approach at making sure people are basically complying with the basics of tax compliance, which these rules roll out, and there's all often a lag between the rules coming in and HMRC actually policing them, and we're starting to see that coming through now. So yeah, I think if people have got any concerns around the compliance process and whether they've remained compliant in the past, it's certainly worth addressing, because if they're not addressed now, then either HMRC are going to address it or it will certainly come out on a future exit.
So thinking about the forward planning and due diligence process, is there anything a CFO or FD could be doing, particularly if it's got quite a complex group structure?
Yeah, so one of the things we see quite frequently is where tech and SaaS businesses have sort of developed multiple products or multiple IP across sort of a range of sectors, and actually you find a buyer that's interested in a very, very specific part of the business, or there's bits of the business they specifically don't want to take on an acquisition. So in reality, at that point, you need to look at pre-transaction, how you can structure the existing groups and companies into a structure that a buyer could buy and not take on what it doesn't want. So a couple of options are you look to sort of package up all the things a buyer doesn't want and look to go through some demerger process to take them out under different ownership, or on a transaction, a buyer might look to just buy the specific trade and assets of the part of the business they're interested in taking on. The complexity around doing those two will largely depend on actually how big the bit of the business is they want and how big the business is that they don't want, and how easy it is to actually get a hard line separation on them. So yeah, I think understanding ahead of time actually what your go-to-market proposition is in terms of what you're going to look to sell is useful in terms of then determining how we structure the group, how we structure the ownership of some of the IP that relates to it.
So in your role as leading the M&A tax function, how do you make sure that you bring kind of the best of Moore Kingston Smith to our clients in terms of advising them on all the complexities of the transaction?
Yeah, I mean, Moore Kingston Smith, we're very strong across the M&A space, both from a tax perspective, which is why I'm here, but we work very closely with our corporate finance and transaction services teams. So working with corporate finance on the sell side, actually advising sellers on selling their businesses. Usually with the transaction services, we're working with buyers looking to buy a presence in the sector and in the UK, so more of a due diligence focus at that point. But we also work very closely with our legal team as well, who again will work on both buy side and sell side from a perspective of M&A taxes and corporate law.
Thank you, Dave. It was really interesting. There are clearly lots of complexities out there that we want to support our clients with.
Absolutely, thank you.
So that was hopefully a really interesting insight into the M&A tax considerations for technology businesses, particularly those fast growth SaaS. Plenty of things for investors, CFOs and FDs to think about. And clearly we can support in many ways, but particularly the importance of that early exit readiness, particularly when you're heading into events and transactions in the near future. If you'd like to hear a little bit more about this or get in touch with us, then I'm sure Dave would be very excited to hear from you, but also you please use our website or get in contact with us through our usual channels.